Hey, thanks for joining Uncle Mike for this edition of the Dow Directions, a technical analysis of the Dow. Well, if you remember from last night, I made a comment that we needed to hold these moving averages, and we did. And actually, they're all pointing upwards now, which is a good sign. The T8, the 50-period moving average, still to the eye is level, but is upward sloping a little bit. And the 20 EMA is an upward sloping line. We also have our 200-day moving average, 91.46 and a half. And this is, again, looks level, but is upward sloping at this point in time. So a nice day in the market. We had this rejection wick yesterday. You can see it didn't move too far, but there was rejection to prices on the downward side. So now let's see what happens next week. Rejection to upside, downside. We'll see what kind of candle they put in on Monday. This is a good sign though for consolidation, and expect to have some sort of consolidation and or pullback. The area we want to hold though is this 50-period moving average, which coincides with the 61.8 retracement level, which is right at this line there. Let's take a look at our John Day chart checkup first this evening. The price bias is now upwards again. In the short term, prices are stalling. In intermediate term, prices are basically ranging or going sideways. The projected upper bound is 85.45, so we have a ways to go. And the lower bound is 74.86, and we don't want to hit there because we'll be under those moving averages. Let's look at our profile for the day. The Dow closed up 45 points. Volume was 28% below average, and the Bollinger Bands now are 25% wider than normal. The technical outlook for the short term is overbought, intermediate term is bullish, and long term is bearish. The Dow is currently 14.5% below its 200-period moving average, and this is in an upward trend. The volatility is low as compared to the average over the last 10 periods. The trend forecasting oscillators are currently bullish, and they've had this outlook for the last 11 periods. The security price has set a new 14-period high, but the momentum oscillator has not, and this is a bearish divergence sign. So a little bullish, bearish. You can see indecision on this wick, indecision to the downside on this wick. So we're in a period of indecision and or consolidation for the Dow. Well, we'll see what happens next week for our charts, but one would think that we'd have some sort of retracement down and hopefully heading back to the upside. And this is a good sign for technicians to hold the 50 and the 20, be able to hold that. The next big step will be the 200-period moving average to be able to close above and hold that level. Well, thanks for joining Uncle Mike for this edition of the Dow Directions, and I'll see you on Monday evening.